what's going on, cash flow hackers?
What's going on, my fellow wealth creators?
So today we are here at the Life180 Mastermind, and we were just talking, and this guy was talking about some of the articles he's been reading, some of the research he's been doing about what's going on in the tax world with Biden, all the crazy stuff he's doing, and what's going on with the bank failures that have been happening. And it's kind of something that reared its ugly head, you know, just over a year ago, and it's kind of coming back around. So we thought we'd do a video, just kind of share on this topic, get right to the point. So get into it, man. What's going
on? I try to not consume too much of that content because it's really stressful and can be unproductive at sometimes. But you do want to stay on top of it as well because it does impact the decisions that we make.
For sure.
And it's crazy. I actually made a video. It was a couple of months ago when the emergency lending program, the exact name escapes me at the moment, but when that expired, it was in force for a year to bail banks out because their balance sheets, they just have massive unrealized losses right now due to raised interest rates. Well, that expired, and I did a video talking about that, just letting people know, like, hey, this is something you need to be aware of. If you have motorcycles in the background, it's always fun here in the Dominican Republic.
we got a lot going on.
But you need to be aware of this because if you have a significant amount of money in the banking system, I'll get to the taxes part of it here in a minute, but you need to be aware of that because that impacts what we do with our money. And recently I just saw content that we've had our first major bank failure. It's
of 2024.
Of 2024.
Yep.
And the name is weird too because we had First Republic fail last year.
Yeah.
Republic First has failed this year.
Right.
And it had $4 billion in assets. And here's the thing, people will say,
that's not a small bank.
No, it's not. It's not Wells Fargo or anything like that, but that's a lot of money, okay? And, I'll hear people say, like, oh, well, my money's protected by FDIC insurance and whatnot. It's massively overfunded, number one. Number two, how do you know how long it's going to take?
Underfunded.
What did I say?
Overfunded.
Underfunded. Thank you.
We overfund life insurance.
Exactly.
We underfund our banks around here.
Yes.
So,
Exactly. I appreciate the clarification. That is important. But it's massively underfunded, and how long would it take you to get your money from the FDIC itself anyways?
Right.
Do we really want to be taking that amount of risk? Yeah. And when I saw this major bank fail, it just reminded me of one of the major reasons that I moved, not all of my money, but a very significant portion of my safe money, money I was using for opportunities, emergencies, and things like that. I moved that out of the banking system.
For sure.
A big reason was the lack of safety that we think banks have. Of course, my money was just sitting there doing nothing in the bank as well. But it was just such a reminder about why it's so risky, in my opinion, to keep a large amount of money in the banking system.
I don't think there's a doubt. I think, it's interesting to me. I remember reading last year when the First Republic thing was happening, the Signature Bank happened, and there were these failures. And when you read through the documentation, and I haven't read through the documentation of this one, but last year when you read through the documentation on all the banks that failed, the reason for failing was a lack of new deposits.
Right. Yep.
And so
that was
if you think about this, it's like the banks are supposed to be our safe place for money, yet if the bank is requiring new deposits to stay solvent, that's basically self-admitting they're a Ponzi scheme.
And so, exact definition.
Like, if we were to go and talk to people about, hey, do you want to get involved in a Ponzi scheme?
Right.
You would run as fast as you could the other way. Yet everybody thinks like putting our money in the bank is as safe as it gets. And I would just argue that, it's never been more unsafe to keep your money in a bank than
100%.
Now. And it's, we all talk about compound interest. We all talk about the power of compound growth. But the problem is we also have compounding that works against us right now. When you look at the world that we live in and you look at government debt, our government debt grows more every year now than it took literally 200 years to grow one time. Right?
It's just insane.
And so there's this concept called hockey stick growth, and now we're in this hockey stick curve, and things that used to take decades or even a century now happen in a year. Right? And that's the challenge. That's great when we're saving money and we're trying to plan for retirement and our money is growing at that rate, but now we have all this debt that's like run away. We have unfunded liabilities. We have all these things. We have interest rates going up. The the amount of money every year that it's taking to pay the interest on our debt with rising interest rates and inflation, unfunded liabilities, like just consumer debt is now, I mean, all these numbers are coming in, credit card debt, auto loan debt, mortgage debt, student loan debt, all around the board, like all the metrics, PE ratios for all these publicly traded companies are at the highest ratios they've been since 1929, and I don't have to tell you the history behind that. So like, I look at the metrics and I go, something's not good, right? And then when we look at banks and they need new deposits, and I look at the economy and I look at the market and I go, whoa, there are not a lot of new deposits coming in. If anything, people are going to be liquidating their bank accounts, the safe, accessible capital that they have, because they're going to have problems in a lot of investment areas. They're going to have problems with a lot of these corporations that have a lot of the money in the banks.
Sure.
Like a lot of these banks, these regional banks that are failing, they're run by like business deposits. And when these businesses start to fail and they have to liquidate their savings and they're not getting new deposits coming in, the Ponzi scheme is up.
It blows up.
Right?
Yep.
And that's where we are right now, and it's scary. And now let's kind of transition to the next thing that you were talking about with the taxes.
Yeah.
Because this is super relevant.
Yeah. Just real quick though, couple of
okay,
other bullet points. No, I get it. And you were talking about the lack of deposits. It's inflation too.
Yeah.
So you have inflation. It costs so much more money to buy the same goods and services that it did 1, maybe 2 years ago. It's absolute insanity. Yeah. And like people get excited sometimes, like when I talk to them, like, oh, you know, inflation's getting under control. It's come down from 9 to 3%. Yeah. Okay, all that means is that things are getting more expensive a little less quicker. That's about it. But that doesn't mean prices have come down. So people are spending more money on the same goods and services. Yeah. So that's pulling more money out of the banking system. You know, and also you have the fact that because interest rates are higher right now, you get really good interest, like rates of return on T-bills, like basic T-bills. I put a decent amount of money into T-bills right now because why not? Yeah, right. Totally. And so you have all that liquidity exiting the system. That's what creates so many problems for the banks. And it wouldn't be that big of an issue if you didn't have fractional reserve banking, if you didn't have all these unrealized losses, right? But that is the reality. That's the system we have. And I just. When I hear people say that, you know, just keep my money in the bank, like we're rolling the dice here, guys, as compared to a mutually owned life insurance company who has, these guys have never missed a dividend payment. They've weathered every financial disaster for the last 150 years. That's who I want my money with. Right? Yeah, for sure. So that's another aspect of the lack of deposits. But so transitioning into the taxes. This is a really interesting conversation because, you know, we hear oftentimes like, you know, 401ks and these pre-qualified tax qualified plans. You know, like you're all you're doing is deferring the taxes. Right. Okay, but the question that we often ask people is, do you think taxes are going up? And I think a lot of people actually say yes. So then why are you putting so much money into these tax qualified plans if you're going to end up paying more taxes later because taxes have gone up, not to mention it's on a larger amount of money as well. And I saw an article today, Chris, about Biden trying to raise capital gains tax to 44.6%. That's just capital gains, okay? And they have to do this because of the runaway debt, the inflation, like all these liabilities that they have. How do you think that gets paid for is through taxes? So what do you think they're going to do to income taxes and tax brackets and all that? And again, like when I saw these two major things, like these two things were just so important to me because they impact the long-term planning of your finances. And if you're not paying attention and you're not making the right moves, oh man, you're in for a really big roller coaster.
Well, I got news for you too. When you raise capital gains to 44.6% compared to what they are now, you're talking about, you know, when you look at capital gains, what gets taxed with capital gains taxes? You're talking certain investments like just brokerage accounts. You're talking about real estate.
Real estate
gets, and
let's
just
already
talk about
starting to struggle a little bit.
Let's just talk. Real estate's already having a hard time, right? But let's talk about all these investors that are looking to sell property. And what do? They either 1031 exchange that money, meaning roll it into the next property, or they cash it out and take a capital gains tax on it. At some point in time, you have to, unless you're just going to pass it on and take the step up in cost basis and all that to your heirs, you could pass it on, But then what are you doing? I mean, you're losing a lot of the benefit, right?
Sure.
But if they cash it out, that's going to be a lot of money sucked out of the real estate market, right? And when that money
100%.
gets sucked out of the market with increased interest rates, with less liquidity, with less money and capital actually chasing the same goods, that's going to, like, it's setting the stage for a massive kind of reset in real estate pricing. And, you know, I think it's kind of a gross situation. I think the writing is on the wall that it's just a matter of time. I think it's been in the works for some time at this point in time, maybe 4 or 5 years, that it was inevitable that we had to hit a reset. I think the whole pandemic just kicked the can down the road because it was about to happen. The pandemic made it happen, but because of the pandemic, they were able to implement all these policies that kicked the can down the road, but quite frankly, it made it worse because now they
makes the problem bigger.
Yeah, it took more money and fueled it into it turned the bonfire into a house fire, like a dumpster fire at this point in time.
Pretty much.
You know, and so now what we're looking at is what was going to be bad is going to be worse. And I'm just a big believer, like, I'm not a doomsdayer. I'm not somebody who believes, like, we're going to lose the world's reserve currency anytime soon. I think it's inevitable we'll lose it at some point in time.
Agreed.
You know, because history says that, you know, one nation doesn't dominate the world for, you know, much longer than we've already dominated the world, right? So, like,
it's bound to happen.
It's bound to happen, and that's not a bad thing. And, you know, but here's the deal. That's another reason I love my money with the banks, right? Or with the life insurance companies. Edit that out, right? No.
Take our money from the banks to the life insurance companies.
And I like to take it away from the banks, put it in the life insurance company because of the fact that banks, when it happens, you are participating in a fiat currency system wholly. Now, for anybody that's like, oh, I don't like banks and I'm going to do gold and crypto and whatever because I don't want to participate in the fiat currency system, I got news for you. You're crazy. You have to participate in some capacity right now.
You can't fully exit.
My challenge is with the world's reserve currency status and that potentially at risk, I want to have my money in a place that I could participate in the system as it exists right now. But when it transitions, I don't want my money stuck in a place that's beholden to that system. Whereas life insurance companies, when you put it there, you have liquidity, use, and control of that money right now. And when the time comes, if it makes sense, the general fund account managers, basically the investment department of the insurance companies, are going to manage that risk, and they will diversify. They will get out of dollars. They will get into crypto. They will get into other assets when the time is right. That's how they've been able to manage transitioning 3 different currencies since mutually held life insurance companies have been around in 1840. Think about it. They've been before the Civil War. They transitioned the money after the Civil War. In the great crash of 1907, the financial panic, the Great Depression, the Great Recession, COVID, life insurance companies don't fail. They always pay a dividend, even in all these hard times. It's pretty powerful.
It's another major reason I moved my money, because you're saying you want your money in a place where you can be proactive and you have control and liquidity so that you can maybe respond. But see, I would take that a little bit step further as well, where, okay, you know, I'm paying attention to what's going on, but you know, there's so many different things that can happen, so many different levers that can be pulled in the system, so many tricks that the Federal Reserve and the government, all these accounting tricks, like, you don't actually know what they're going to do. Like, I can't tell you how many influencers, you know, really top, like, financial guys, over the last 1 or 2 years that I've been listening to, we're going into recession and all this, and now what they're saying, they're backing up from that, saying, hey, we thought there was going to be recession, there's not, and maybe there still will be, right? But that's my point, is we don't know. So here's the thing, I don't even want to figure it out. I want my money with a company, with a team that knows how to do this, and they've been doing it for 120 years, 150 years. That takes so much stress off of me. I can still pay attention to make moves and make my investments and stuff like that, but they are the ones managing all of the chaos and uncertainty right now, and it just helps me sleep so much better at night, and it allows me to show up more powerfully in my business. It allows me to do research on different investments a lot more effectively as well. So
because
really, really
gives
powerful.
You certainty. You have an element. You need, in order to be successful with your money, you need a core, a foundation that provides certainty. When you go do research, like, just don't worry about whole life insurance or banks or any of this stuff. Just go do research on what people do, and go research when the markets are successful, real estate, stock markets, whatever investment markets, and when they're not. The reason they're successful is when there's more certainty and confidence.
Right. Yep.
And when there's not, when it's going down, it's because there's less certainty and less confidence.
Right.
So what you need to do is build a financial foundation and framework that you have certainty behind, and you need to build on top of that certainty. Then you can go take risks, and you can ride the waves and do all these different things. But you need to have that foundation of security in your life.
100%. So I think we are taught to do it backwards. Like you said, people think they're saving for retirement. You're actually investing for retirement, and there is a massive difference. And if you don't have the financial foundation in place first, quite frankly, in my opinion, you don't really have any business investing just yet. Okay, you have to build that foundation first. And the good thing about these policies is you get so many benefits. They solve so many problems with the same dollar. And like that's why it creates such a powerful foundation. And why I'm such a fan of it. I have 2 policies now. I actively use it to build wealth. And I know that my policy is growing every single year, and I don't have to worry about the chaos. And you know, at this point, guys, what I would finish up with is I don't think, like you were saying, when you know, things are growing and things are good, there's a lot of confidence or whatnot. Okay, anybody can make money in that market, but we're entering a phase where, like, you can't just put money in the market and be like, okay, I'm going to be okay in 30 years. Like, there is a lot of crazy stuff going on. You can't bury your head in the sand. You have to be proactive with your money here and make sure you're putting it in the right place that's alignment with you and your goals.
100% agree, and I'll end by reiterating your point and say I just did an interview with John Wolfenbarger from Bull and Bear Profits.
Oh, that was fantastic interview.
And he really pointed out to me his favorite indicator and Warren Buffett's professed favorite indicator of the direction of the market. And he goes, everybody says Warren Buffett's not a market timer. He absolutely is. And this indicator indicates that the stock market valuation is so out of whack right now, it's actually supposed to be 50% less valuable than it is today 12 years from now.
That's mind-boggling.
So even if that's wrong, even if it's the same 12 years from now than it is today, that's a problem for a lot of people. So I would really encourage people to be very, very cautious with whatever they're doing when it comes to their investment strategies. And that's why you're here. If you haven't already, make sure you subscribe to my channel. Make sure you subscribe to Matt's channel. The links will be down in the description below. If you have any questions about anything, comment in the comment sections below. We are both super committed to staying engaged and responding to every single comment that we see. And then, of course, reach out, have a conversation. If this is something that you've contemplated, if you're doing research on life insurance, if you're thinking about how could I, utilize this as a banking alternative and as a bond alternative, as different elements of my portfolio, and how can I get each dollar that I have in my safe money portfolio to perform multiple functions, you need to reach out. So
100%.
Hopefully that helps. Until next time, have a blessed, inspirational day.
See you guys.
See you guys. Cool, man. That was good.
Woo!